Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will apply and update the classical technical analysis view over the short term for Lilly stock. And as usual, first of all, we will check the major structure over the monthly chart. And as we can see, it's very healthy, rising in an acceleration mode. The angle of the trend is getting steeper, more steep, and this is indicating more bullishness. Of course, these details will be much more clear over the weekly chart, but over the monthly chart, things are looking very good and very healthy. Why I don't want to draw supports and resistances over the monthly chart? Because the most significant key levels over the monthly chart are $93 and $64, and these areas were very old areas. As you can see, there was a kind of trading range where the stock was stuck in between these two levels. As 64, it was a support at that time, and 93 was a resistance at that time for around approximately 3 years. And after that, there is nothing to be drawn over the monthly chart, because every top or bottom, every support or resistance is easily drawn and more accurately drawn over the weekly chart. Concerning the candlesticks of the monthly chart, I think this candle is very important. The candle of June, it's looking like a hanging man. And this hanging man, its lower shadow is very important to always be intact and never be broken in order to keep the healthy outlook of the stock over the long term. By chance, the lower limit of this candle, the tip of the lower shadow, is very near to the nearest weekly support at around $275. It's exactly at 282. So we can consider this a kind of area which is of around $7 thickness and should always be intact if any correction took place. That's it for the monthly. Let's check the long and the medium term picture over the weekly chart. And we do here have a lot of details. We can see that the stock is in a very healthy uptrend over the long term. Here is the uptrend line connecting the higher lows, as well as the channel line connecting the highs. We can see that at the start and the beginning of 2021, the stock managed to break above the channel line, gaining more acceleration and more bullishness, and this is a sign of strength, of course. And we should draw a speed line measuring the new angle of the trend. And here we go. We should draw it now. I think here it goes. This is the speed line connecting these lows, this low on October 2020 and this low on February 2022. And of course, we should draw directly and immediately the channel line of the new angle of the uptrend. Okay. What we should notice that this new angle is really well established. You can see here the low, and here is the higher low, here is the high, and here is the higher high, here is another higher high. So it's really very well established new angle uptrend over the weekly chart. Of course, in this area we do expect some kind of selling pressure it's expected because when you challenge the channel line, and you may reflect to the downside in a correction, or you may reflect sideways in a more healthy correction. So I think it's a matter of time whether Eli Lilly will start correcting. But I think because the stock is strong, I think if a correction to take place, it will correct sideways, not downside. Okay, volumes are normal, little bit more than the average, and that's okay over the weekly chart. And I think we should jump for the short-term details. But before we jump, we should notice that this support at around 275 is very important and critical for the health of the long-term uptrend. If a correction took place and the stock fell down, it may be considered normal and not a cause of fear, as long as the stock manages to test successfully 275 and rebound from it to the upside. So it's very important that these previous resistances should or expected to work as a support if any correction over the short term took place. So keep in mind that 275 is very important number for the health of Eli Lilly over the medium and long term. And as you notice that it is running at the same point exactly with the new speed line at the same level. So it's a kind of double support, and this increases the importance and the significance of $275 area. And I say area because there can be some kind of volatility around the major long time frame supports. This may be plus $5, minus $5. It may get to be $10 in thickness, and that is acceptable. Now let us explore the short-term details over the daily chart. And it's very, very bullish over the short term. Here is the short-term resistance that hit the stock hard several times before. Once in April, the second was early June or late May, and we can see the horizontal support that we have just been talking about from the weekly chart at 275. It managed to support the stock very well, and sometimes it recovers earlier, a little bit earlier from this support. So at that time, over the short term and over the daily chart, it looked like the stock was moving in a trading range of around approximately $40 thickness. And this is pretty thick trading range between 275 and 315 approximately. So we do have a kind of relatively thick trading range. The break was on a rising price gap, and of course we can see during the last move the volume was rising and it was higher than expected, and the stock managed to close above 314, which was the short-term resistance. It managed to close above it, I think, more than a week. And all this indicates that this break is confirmed and valid, and the stock, if it drifted sideways, it may give a chance for a virtual trade on the long side with a stop loss just above $300, and I think the target short term may be around $340 over the short term. Of course, over the long term, it may go much more to the upside. as long as it is moving near or adjacent to the rising channel line. So Eli Lilly is positive over the all time frames. Let us check it once more. Monthly is very healthy, the angle is steep, no bearish candles, volumes are accepted and normal. Over the weekly chart, the new angle uptrend is well established, and there is nothing to fear of except that it is testing an area where the channel line is running, and of course there is some expectations of some kind of selling pressure, which is just a correction over the short term, and this is well accepted as long as the closing is above 275, which is very important over the weekly chart, and this correction will not distort the structure over the long and medium term. The stock is still healthy, and we can see the candlesticks are showing no signs of correction or bearishness. Over the daily chart, the stock just managed to kick up out of the trading range on a price gap and increased volume, confirming that the break is successful, and it also managed to close more than a week above the broken level, adding to the positivity of the stock over the short term. So all these point to 340 as a short-term target, maybe more at the longer time frames. We can speak of 350 or much more. For the time being, those who think that they do have positive outlook for the stock as me, the stop loss should be just a little bit above $300, maybe 305, 306 is acceptable, and your short-term targets, as mentioned, ranging between 340 up to 350. If any correction took place over the short term, it is accepted as long as it is above the short-term support around 314. This is for short-term traders. But if 314 is broken, short-term traders are not bullish anymore. But still, the medium and long-term investors are still happy and safe as long as the trend line is intact, as well as the support horizontal level at 275. So Eli Lilly is positive over all time frames, as I said, and I think within a day or two we can jump into a virtual trade on the long side, especially if the index of the market continued its correction to the upside. Thank you for watching. Please like, share and subscribe, and see you soon.